All right, folks, we are back from the Vancouver Resource Investment Conference, and once again, it did not disappoint. Had the pleasure of catching up with Andy Schekman, and I wanted to talk about the opening panel. They started off, obviously, Jay Martin opened up the conference talking about the changing world order and the shifts that we're now seeing. And then the first panel discussion included our good friend Andy Schekman from Miles Franklin, and it was titled Tectonic Shifts in Money and Power. And I wanted to talk about this, share a few data points with you guys, and explain why so many people aren't going to make it. And the main reason is this logarithmic decay of the US dollar that we're seeing, and basically the stalled out and suppressed assets that are set to reset the system. But many people aren't going to be able to hold with conviction. They're not going to be able to hold and stay solvent to see that all the way through. And so Andy, once again, stole the show. Tectonic Shifts in Money and Power was the first segment. And then he did a workshop later that day titled The Logarithmic Decay of the US Dollar. So I wanted to speak on that. Before I do, though, I wanted to go through these data points real quick for you guys on the commodity space. So once again, we see yesterday that we had a 2 million ounce drawdown at the COMEX, where they keep on rigging and suppressing these prices. But we see another massive drawdown. Then I wanted to talk about this chart right here from Tavi Costa, who was at Vancouver Resource Investment Conference last year. He did not attend this year, but a good little tweet right here comparing Chinese stocks versus copper. We've seen that the Chinese stock market has dropped by about 50% from its all-time highs, and so they are in free fall right now. And many people were worried that copper and some of these other precious metals were going to have drawdowns if we saw China go into recession. But copper is actually holding its own very well, remaining resilient, and he explains why in this tweet right here. Despite the collapse in the Chinese economy, copper has shown remarkable resilience, a scenario unthinkable for most investors just a few years ago. This resiliency can be attributed to three main factors: rising demand from G7 economies aiming to rebuild their manufacturing capabilities, offsetting the effects of the decline in the Chinese market, the early stages of a green revolution emphasizing the crucial role of metals like copper, and the onset of an inflationary era prompting an increase in buyers for natural resources and related assets. This is why I'm so excited about the commodity space. This trend echoes the last 1 to 2 years when gold stood firm while the fixed income market fell apart, a common occurrence during inflationary periods. These fundamental shifts are in progress, yet many market participants are still anchored in the mindset of the previous investment cycle, especially with our stock market hitting new all-time highs, right? S&P 500, Dow Jones, NASDAQ, NVIDIA, they keep on printing green candles going to all-time high, and it's really distracting the masses. In the face of the persistent downturn in the Chinese economy, commodities have experienced nothing more than a consolidation period over the last 18 months. This phase is laying down the foundation for a substantial upward movement as Chinese monetary and government authorities are compelled to implement additional stimulative policies to support their market. Keep in mind that the People's Bank of China balance sheet assets have surged by nearly $600 billion in the last 4 months. So they're trying to save things over there, and this was a concern for many commodities investors, including copper, because you need copper for everything, and including it's going to be a big part of this Green New Deal, right? But we've seen that copper has remained incredibly resilient despite the downturn in the Chinese economy. Speaking on another one, lithium, we have the CEO of Eureka Lithium, Jeffrey Wilson, speaking on Tesla, investing upwards of about $1 billion in the supply chain of lithium. These critical metals and minerals are so important to this process and this transition. And so now we're seeing even car companies like Tesla and GM getting exposure to this space. Listen in on this one, folks.
We've seen Tesla looking to spend over $1 billion in the lithium space at various different stages of sort of the supply chain. We've seen GM, again, being fairly aggressive with an investment of nearly about $750,000. And Stellantis, which is formerly Chrysler, is invested somewhere close to $100 million, or is investing somewhere close to $100 million as well into the lithium space in order to generate or secure the necessary supply to make sure that they can fulfill their objectives in terms of the increased production of electric vehicles.
Yeah. And that's just part of the story. That's just part of the thesis for why it's running up. Let's take a look now at palladium. Has had a huge 40-year parabolic base in the making. Said big breakout coming on the daily chart. Got it. This commodities bull is a historical opportunity. Palladium and platinum have fantastic charts now. This is from Grady Commodities TA plus Cycles. Another chart from him on uranium, which we've now already seen run up. Uranium miners did 580% in its baby bull move. Been saying for years above the black line, the real fireworks starts. Breakout last week. Have caught all major lows and highs on the surface for uranium since calling the 2020 March low. Tried doing that without charts. Well, this is the thing, is we've seen a historical run up right now in uranium as the price has soared to $106 per pound in January, the highest level since 2007, as mounting setbacks to supply coincided with increasing demand. Kazakhstan's state-owned Gazatomprom, the world's largest uranium producer, stated that it would be unable to meet its production target for the next 2 years amid a shortage in inputs and construction issues. This added to Canadian Camco's outlook downgrade in September due to issues in key mines and uncertainty over French Orano's output due to Niger's military coup. So all of these conflicts, all of these supply chain issues, we're seeing it right in the Red Sea. It's just continuing to add pressure to these underlying commodities, and it really is part of the broader commodity war that we're experiencing in, that's going underway right now. Additionally, Western utilities continue to voluntarily shun Russian uranium imports due to its invasion of Ukraine, while the U.S. moved closer to banning its imports. In the meantime, ambitious decarbonization goals drove the U.S. and 20 other countries to announce that their nuclear power will be tripled by 2050. The large bets on nuclear energy are led by China, which is building 22 of 58 global reactors, while Japan restarted projects to increase nuclear power output. Now, I spoke to, this is Can Alaska Uranium, and I spoke to the CEO, Corey Belk, got his business card right here. And I learned so much from these guys. This is what I was so excited about, was learning about the other minerals and resources other than gold and silver, which I'm already pretty familiar with. But learning about uranium, learning about copper, the thesis for where these things are going. And speaking with Corey, right, he explained how basically the run up here, although we've seen an incredible run up, and we're probably going to get a sell off, we're probably going to get some sort of correction, but this is just the start of a broader cycle, a bigger cycle that's underway. And what Corey was explaining to me is, I asked, does this check off the box on the Green New Deal on the ESG? And he says, yes, it does. Now it's considered, you can check that box for your ESG credit score. This is now considered green energy. And nuclear power has really been overlooked. It's been shunned. Obviously, Fukushima kind of led to that scare event. And we do have to be careful with it. There are, very significant concerns to be had. But as they want to do this decarbonization, as they want to move to cleaner energy, uranium remains to be one of the best solutions for doing so. So we're going to continue to watch that one. But tying this all back together into the tectonic shifts in money and power, right? Commodity war underway, and you're already seeing that really ramp up over the last couple years. What we're seeing now, and why I get so excited, is that I understand how they can move into a system where they don't even have to trust each other, but they will have interoperability between their economies, their currencies, and as they tokenize these commodities and these resources, this is what brings about a level playing field that all these countries, not even BRICS, we're expanding out, and we're talking about countries outside of BRICS that are still trying to get away from the US dollar, and they're trying to find ways to do trade in their own local currencies. They don't want to hold each other's currencies, but they want to be able to trade outside the US dollar. And so now we saw this was announced just today. Russia and India partner to create a digital economy. It's already happening and it's already ramping up. The Bank for International Settlements reporting today that it is starting a new phase of Project Leap, aiming to provide a blueprint for migrating payment systems to quantum-safe cryptographic protocols, working jointly with Eurosystem, Banque de France, and Bundesbank. And this, once again, is moving to quantum. It's moving to tokenizing this whole internet of value, including commodities and resources, and that bridge currency that you need to put in between, right? That the payment rails that remove the trust and allow interoperability between different CBDCs, different countries, tokenized commodities. And this is the solution. This is why I love going up there and talking with these guys that many of them don't like crypto. Many of them don't understand crypto. All they've ever heard of is maybe Robert Kiyosaki mentioning Bitcoin. And so merging what I know about the digital DLT, right, distributed ledger technology, with what these guys are trying to do with the commodities, the real value that runs our world, this is why I love going up there. And what I found, I got my notes here from this first session, Vancouver Resource Investment Conference Day 1, where Andy started off on stage with a few others talking about the tectonic shifts in money and power. And they noted how what we're seeing is countries are still using the US dollar. You saw Argentina. They're not going to join BRICS, and they want to basically get rid of their Argentine peso and just start using the US dollar. But what we are seeing, while they still are using the US dollar, it's convenient and it's the most liquid currency. What they're doing is on the asset side, they're dumping our bonds. So they're dumping US bonds. They're not taking on any more debt denominated in US dollars, but they are still using currency. Eventually, they're going to be able to stop using the currency. And that's what we're talking about right here with deals outside the US dollar. One of the biggest ones was the UAE announcing deals outside the US dollar for oil. Saudi Arabia announcing deals outside the dollar for oil. Our own allies, France, leaving us hanging in the Red Sea. Not just leaving us hanging on the military battlefield, but now France wants to do deals with Saudi Arabia outside of the US dollar. And so Andy noted, the logarithmic decay of the US dollar is underway, and it's slowly and then all of a sudden. And if you're not prepared, if you're not positioned beforehand, you're going to get left behind. And this is accelerating now that the US has chosen to weaponize the dollar against the Russian assets, seizing all these Russian assets. And that showed the world that if you go against us, we're willing to cut you down in a really a dirty way by weaponizing our dollar and seizing your assets. Now you have to understand, after Nixon took us off the gold standard in 1971, the reason why the dollar has remained the number one is because Kissinger went around and he started working hard to cut deals through 73, 74, and all through the 70s to maintain US dollar as the world reserve standard through now a petrodollar backing, where basically we were going to trade oil for dollars. Now, that's what kept us running up until now. Now we're starting to run to the end of that. And Powell cannot raise rates like Volcker did. And that was the other part of what they did to save the dollar. 1971, Nixon took us off the gold standard, so we lost trust. So Kissinger had to go around and say, we will protect you. We will back you with the biggest military known to man if you trade your oil for dollars. The other thing that happened to strengthen the dollar was Paul Volcker came in and he raised rates up to 15% or wherever they went to, right? 18, 20%. And so Volcker raised rates which strengthened the dollar, which is what Powell just did, right? At least he tried to. And he did for a brief moment in time. That DXY went back up last year, right? And it had a good little run up while Powell raised rates, but now that has run its end, the end of its course. And now Powell can't raise any more. And this is the problem that we're now going to be facing, right? Is that these countries are doing deals outside the US dollar through DLT, through cryptocurrency, through direct trade for commodities. And Powell tried to strengthen the dollar. He was only able to get us up to about 5.25, 5.5 for the Fed funds rate, nowhere near what Volcker did. And now he's running out of room. And we have 10 trillion in bonds that are coming due this year. And like I said, this is the problem, is that those foreign buyers of bonds aren't showing up. Not even the domestic US buyers are showing up either. So we have 10 trillion in bonds that are coming due this year. Who's going to buy them, right? Where's that going to get replenished? And this was the other point that I noted. Andy Schectman shared that the Crown Prince of Saudi Arabia last year said that China was the most important customer that they had last year and is going to be the most important customer that they have for the next 50 years. Now, the Crown Prince, they rolled out the red carpet. They did the sword dance for Trump. There was a little bit different reception for Biden. And I think that we can all see that we're getting laughed off the world stage right now with our current leader. That's not a political point. That's just an observation on how the deals are going. While they're saying, that basically this is a joke with the U.S., and then they're turning over and they're saying that China is now their most important client last year. And for the next 50 years, it shows you the shifts in money, power, and the commodity war that's underway is only getting accelerated. Now, the Bank for International Settlements highlighting how we're moving to a quantum system. What else did the Bank for International Settlements do? In 2019, they made gold the only other tier 1 asset besides the US dollar. Now, I added my note right here. DLT helps them move away at once. So we are seeing the tests, we're seeing the trials, Project Sandman, Project Leap, Project this. And just like Andy says with the logarithmic decay of the US dollar, it's slowly and then all of a sudden, boom. It's test, it's trial, go live. Flip of the switch. And we're waiting for that point. Price action's down today, right? Everybody's focused on price. And a lot of the retail traders that are, coming into the crypto space, that are looking to make a play, looking to make a trade, looking to make a quick buck, have too short of time horizons. And they're not going to make it, and they're not going to stay solvent because they're going all in on XRP because they think the flip of the switch is next month. They're going all in on gold and silver because they think, that's what's going to back the new system. And they're not going to be able to see this transition out that is not happening overnight. It's taken years. Once again, the Basel III standards already underway, moving gold to a tier 1 asset. That was 2019. Yet it took us until 2023, 2024 here to achieve a new all-time high for gold. So in 2019, they made it a tier 1 asset. We didn't achieve a new all-time high until 2023. Now, we did actually start to run up, though. As you guys noticed, right, we did a triple top on gold in 2020, in 2022, and then once again in 2023. And then that fourth move up is where we broke out to a new all-time high. So this is underway. That cannot be denied. Gold going to a new all-time high confirms this transition, this shift. But we have to remain solvent so that we can see this thing throughout. That's the only thing I want to add, right? And for us in the digital asset space, we understand the role that DLT is going to play moving to a quantum financial system, providing interoperability between countries that don't trust each other, but they still need to do trade. You got grain, we got oil. You got this, we got that. We don't trust each other, but we need to conduct trade. How do we do so? Insert trustless DLT technology, and I just happen to believe that XRP as a bridge currency is the best suited. You guys let me know in the comments down below your opinion, and I appreciate you guys for tuning in and all the support that you guys have been giving us. I got more content coming this way, so make sure you subscribe, hit that notification bell. Everything can be found on my website, ZachRector.com, including if you want to get some precious metals. We got affiliates for that, precious metals, crypto exchanges, wallets, and if you want to get tapped in with our private investment community, that is available all at my website, ZachRector.com. I appreciate everyone for the support. Please make sure that you smash that thumbs up on the way out. Drop a comment down below and let me know what you think is going to be the solution for rolling on over to this quantum financial system, providing that interoperability on that world stage. I've made my pick. You guys let me know what yours is. Thank you so much. We'll see you in the next one.